In this video, I'm going to be discussing the top 12 write-offs, in my opinion, for real estate agents. And of course, I'm not a CPA, and I'm definitely not your CPA, so disclaimer, consult your CPA before doing anything, but check out these tips starting now. I've been in real estate now for over 10 years, and I've coached hundreds of agents, and over that period of time, I've learned a lot. I've hired different CPAs, I've read various books, and these are the top tips I have when it comes to saving money on taxes. Before we dive into the list, the number one thing that I really did was hiring a professional, hiring a CPA, hiring a bookkeeper to keep everything in order, to keep everything organized, and a CPA to provide that guidance that I needed when it came to starting a company, right? Starting an LLC, S corporation, C corporation, what do you need, right? My CPA recommended that I was an LLC, filing as an S corp. And there's so many other strategies that I learned over the years from these professionals, and these are just a few of them. Here we go. The top 12 list is starting right now. The first and biggest expense that most real estate agents should have is going to be lead generation and marketing, right? This is what drives your business. This can be Zillow leads, buyer leads, like pay-per-click. This can be RedX. This can be direct mail marketing. All these things that include lead generation or marketing can fall in this category. And I say it should be the top expense for most real estate agents because the biggest expense is the next one that you would have if you're either a team or an independent broker owner. And that expense is going to be your employees, also maybe your virtual assistants, transaction coordination, maybe you outsource that. People that help you in your real estate business, this is the leverage piece. Even if you're just getting started or if you're new to the business or if you've been in the business for a while but you just want to start building in different leverage pieces, hire a virtual assistant. It's a great way to get started. I've been using a company called Online Jobs for a while now, and if you click the link in the description, you can sign up. It's super easy to use. And what's interesting about it is I've hired countless virtual assistants over the last 10 years as a real estate agent. And what I found is that there's a lot of companies out there that say they'll train them for you, they'll find them for you, and then they're going to charge you about double what it would cost you if you just hired them direct to source through this website, link in the description. I actually found the quality hiring direct was much better than what these companies were providing. So the company was acting like a middleman, like different companies, I don't want to name them. One big one is Upwork. That's a little bit of a different model because it's more of a marketplace of different skills and talents. I love Upwork, to be honest, but there's other companies that are oftentimes real estate specific that are offering these services, and they really just charge way too much. I also found that hiring direct is a great way to benefit not only the virtual assistant because you can pay them more because there's not a middleman anymore, and it's a great way to also save you some money and have more control with the overall process. The third is going to be coaching and training. Are you investing back in yourself? This is going to be the best expense that really your business can have. It's my opinion that you should be spending at least $12,000 a year either on coaching, masterminds, training courses. These are like online courses, going to different conferences, both local and nationally. It's so important because there's a couple things. The people that I find are the most successful in real estate are coachable, and they're also willing to grow. These are important things, and think about it. You're the average of the 5 people that you spend the most time with, so don't you want to be getting in these coaching programs, going to these events, and surrounding yourself with some of the most successful real estate agents in the industry? That's exactly what I did, and it was a huge reason for my success. I got in the rooms, I got around the people, and that leveled up my skills, my ability, and quite frankly, what I thought was possible in the real estate industry. The fourth one is going to be software and business tools. This might be your CRM, right? Your contact relationship management system. This might be maybe a video marketing service like BombBomb, just a way to send out video emails really easily. This might be a simple mailing service like Mailbox Power. Now this is a really cool way to actually send out free postcards, only you pay postage. If you want to hear more about that, I also have a link in the description for that to check it out. It could be your dialer system, it could be Keeping Current Matters. That's a great platform to learn more about the real estate industry and to be able to send useful things, useful information to your clients that looks really good. That's Keeping Current Matters. Fifth one is going to be MLS fees and realtor dues. Of course, Pretty self-explanatory. As a realtor, you're going to pay yearly fees and MLS dues. This could also include continuing education. And before I forget, make sure that you have a separate bank account that's tracking all these expenses, or a separate credit card. Even if you don't have a company yet, an LLC or anything like that, it's still very useful just to have one checking account or one credit card where you're putting all these expenses to help you stay organized. Number 6 is going to be listing expenses. These are all the costs associated with listing homes. This is going to be the yard signs, maybe open house signs, and you want to make sure that they're all branded to you. You don't want to just use the signs that your broker might be providing you. You want to start to build a brand in your local market. This is going to include lock boxes, professional photography, maybe video, brochures for the home. Maybe you're doing just listed, just sold postcards around the neighborhood, which you could do for free using mailbox power, link in the description. Number 7 is going to be office and utilities. Maybe you're actually paying for an office. Well, that's going to be a write-off. Or maybe you're just working from home. If you're a real estate agent, you probably spend a portion of your time working from home, even if you go into the office on occasion. So look at what's possible for writing off your home, office, and utilities. I don't want to go into too much detail about it. Again, consult your CPA, but it involves how much square footage are you using of your house that's specifically dedicated for work. And there's a formula. It's actually really simple. You can Google it or ask your CPA. Number 8 is going to be vehicle expense. I know a lot of realtors that drive over 20,000 miles a year. That's a lot of miles. And if you're not using the deduction when it comes to how many miles you drive, you're missing out. For 2023, it looks like they're going to allow you to write off 65.5 cents per mile. Use something like Mile IQ. It's an app, and every time you drive somewhere, it will automatically start tracking that trip, and you're able to categorize what that trip was for right in the app. It's an easy way that allows you to track your mileage. If you're like me, you don't always think about it, you don't write it down, you don't have a piece of paper or a notepad in your car. So Mile IQ, without even thinking about it, allowed me to always track that. And at the end of the week, I would actually look at my calendar and categorize where those trips were if I couldn't remember. And number 9 is going to be meals and entertainment. This one gets a little tricky, and they actually made some updates for 2023. So I'm just gonna read what I found Googling it. So beginning January 1, 2023, meals and entertainment deductions reverted back to the limits placed under the Tax Cuts and Jobs Act. For tax year 2023, many of the business meals deduction will be 50% deductible, while the entertainment deductions will not be deductible. If you're planning on going golfing or taking your clients to a basketball game, meaning those courtside seats, or going to the most expensive country club in your market, it's not going to be a tax write-off anymore. So client business meals, 50% deductible. Entertainment related meals, 50% deductible. Meals in office during meetings, 50% deductible. And I'll link to this website in the description. Number 10 is going to be healthcare. If you're self-employed, you can write off healthcare. Check with your CPI on this one. I was an LLC, so I was able to write it off. However, if you're a sole proprietor, I'm not exactly sure how that works. I think you can still write it off, but double check on that one for sure. Number 11, cell phone bill. You can write that off. If you're using it primarily for business, you can definitely write that off. Now, if you have a family plan, that could get a little more complicated. Consult your CPA on that. And last but not least, and one of the most important, is going to be legal and professional services. Your CPA. I said several times to consult your CPA, not only because I want to cover my butt when it comes to having a disclaimer because I'm not your CPA, but also because it's so important to your business. Don't operate your business for where you are today, operate it to where you're going. And if you plan to be successful in this business, you definitely want to have a CPA and have a bookkeeper. Bookkeeper, now maybe you're not doing that much business yet. Okay, don't hire a bookkeeper yet. It's pretty simple. If you don't have that many transactions, do it yourself. But a CPA, you didn't go to college, I'm assuming, to be a CPA. And if you did, congratulations on switching careers and becoming a real estate agent. So hire a CPA. You want that professional advice when it comes to all these write-offs. A good CPA will be able to pay for themselves, and you'll typically get an ROI. Hopefully you learned something new from this video. And if you did, give me a like, subscribe to the channel. Really appreciate it.